to the weekly market recap with SC Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. In a major boost to the economy, Sri Lanka has recorded a remarkable 101% year-on-year increase in foreign direct investment during the first half of 2025. According to the latest figures from the Board of Investment, realized FDI inflows crossed $507 million, more than double the $252 million recorded during the same period last year. This marks the strongest first half performance in recent years and reflects growing investor confidence in the country's ongoing economic reforms and improving investment climate. During this period, the BOI approved 57 new projects with an estimated total value of $569 million. Of that, $320 million comes from foreign investors. The approved ventures include 31 new greenfield projects and 26 expansions of existing businesses. Key sectors drawing foreign capital include port development, manufacturing, tourism and hospitality, and service-related industries such as regional logistics and operational hubs. Several large-scale projects have already moved into the implementation phase, while new proposals are being fast-tracked thanks to improved facilitation mechanisms. The momentum puts Sri Lanka on a strong footing to meet its annual FDI targets and strengthens its position as a competitive investment destination in South Asia. Meanwhile, domestic investor confidence also saw a rise with local investments reaching $285 million, up 13% from the same period last year. This reflects renewed optimism among Sri Lankan entrepreneurs who are expanding and diversifying in response to macroeconomic stability and emerging opportunities. With signs of economic stabilization taking hold, the strong rise in FDI underscores renewed global interest and growing trust in Sri Lanka's long-term economic prospects. Sri Lanka's government revenue continues to show strong momentum with collection in May reaching an impressive 486 billion rupees, the highest monthly figure so far this year. According to the latest data from the Central Bank of Sri Lanka, total revenue and grants in the first 5 months of 2025 stood at 1.94 trillion rupees. That's a 20% increase compared to the same period last year. Tax revenue made up the bulk of the total, coming in at 1.8 trillion rupees. Analysts say the surge in collection reflects a more effective enforcement drive and an expanded tax base. The inclusion of motor vehicles in the tax net from March has also contributed to the boost. To put the numbers in perspective, May's revenue outpaced previous months, surpassing 414 billion in February, 387 billion in April, and 306 billion in March. In 2024, Sri Lanka's full-year revenue reached 4 trillion rupees, up from 3 trillion in 2023. With nearly half that amount already collected in just 5 months, officials are optimistic about meeting or exceeding these year's targets. The data also showed government expenditure and net lending rising to 2.18 trillion rupees by the end of May, up nearly 10% from the same period in 2024. Despite high spending, the overall budget deficit narrowed to 236.6 billion rupees, down from 366.8 billion recorded last year. Domestic borrowing also saw a decline, dropping to 298.6 billion rupees from 394.4 billion. Meanwhile, foreign financing showed a net repayment of 62 billion rupees compared to 27.6 billion a year earlier. The figures signal stronger fiscal discipline and a more efficient revenue strategy as Sri Lanka continues its path towards economic recovery and long-term stability. The Central Bank of Sri Lanka has decided to keep its key policy interest rates unchanged at 7.75% following its latest Monetary Board review. According to the central bank, the current monetary policy stance is expected to guide inflation steadily toward the target of 5% while continuing to support economic growth. Governor Dr. Nandalal Veerasinghe explained that the decision reflects both the progress made so far this year and a stable outlook going forward. He noted that inflation and credit trends remain in line with expectations and there is no immediate need to change course. However, he added that there is room to lower rates in the future depending on evolving economic conditions and the outcome of ongoing tariff discussions with the United States. On the inflation front, the Colombo Consumer Price Index shows easing deflationary trends. Inflation is expected to turn positive this quarter and move gradually toward the 5% target. Core inflation is also set to rise gradually, reflecting a recovery in consumer demand. In terms of economic performance, Sri Lanka posted a solid 4.8% growth in the first quarter of 2025. Forward-looking indicators suggest this momentum will likely continue in the short term. Private sector credit growth remains strong at 16.1% year-on-year and broad-based across industries. The central bank sees no signs of overheating, noting that this expansion comes after a sharp contraction during the recent economic crisis. On the external front, the central bank reports that the country's foreign reserves remain healthy despite debt servicing, supported by rising tourism earnings and worker remittances. The latest IMF extended fund facility tranche was received in early July, further boosting reserve levels. Global risks remain, including policy uncertainty and geopolitical tensions. The Monetary Board says it will closely monitor developments and act if needed to keep inflation stable and support Sri Lanka's growth potential. Sri Lanka's real estate market is regaining momentum in 2025 as land prices and housing demand pick up across the country. According to the latest Real Estate Market Outlook Report 2025 by Lanka Property Web, land prices in the western provinces have risen by average of 12% year-on-year, with the suburbs leading the charge. The Colombo district suburbs saw some of the biggest jumps. Piliyandala rose by 16%, while Aturugiri and Homagama recorded a 14% increase. In comparison, Colombo 1 to 15 saw a more modest 7% rise in land values. Meanwhile, demand for beachfront property remains strong. Southern coastal areas are seeing average asking price climb to 2 million rupees per perch, driven by tourism growth and rising interest from foreign buyers. Apartment prices are also showing signs of stability after years of market volatility. Urban apartment values rose between 0.2% and 2.8%, while prices in the suburbs grew up by 2.9%. Rental prices have remained stable, particularly in the high-end segment, reflecting consistent demand. There are currently 37,000 apartment units on the market, with another 8,200 expected by 2027. Three-bedroom apartments continue to dominate supply. Foreign interest is also notable, with nearly 28% of online search traffic coming from overseas buyers. Suburb areas like Malabe, Homagama and Aturugiri are providing especially attractive due to better infrastructure and more affordable pricing. Residential homes in central Colombo now start at around 60 million rupees, while suburb options are available from 20 million upward. Rental yields are averaging 3.5% with monthly rents generally above 25,000 rupees. A key factor supporting this recovery is lower borrowing costs, with the central bank's policy rate held at 7.75%. Average home loan rates are around 10%. Making property more accessible to middle-income buyers. Lanka Property Web Managing Director Daham Gunaratna highlighted that 25 new developments have launched in the past year, adding over 2,500 new units. Additionally, projects that were delayed between 2020 and 2023 have now delivered 3,600 apartments to the market. With steady demand, more financing options and rising property values, analysts say that the market is entering a phase of cautious optimism and long-term growth. Let's take a look at this week's Treasury Bill auction results. With the recent Treasury Bill auction, the 91-day T-bill rate stands at 7.62%, showing no change to the previous week. The 182-day T-bill rate stands at 7.91%, showing no change to the previous week, and the 1-year T-bill rate stands at 8.03, down by 1 basis points. Thank you for watching. We'll be back next week.